All right, welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy. Thank you very much for tuning us in. If that's what you're doing, if you've been with us all day, let's make it fun and informational. So you stay. That's what I want you to do. Let's take a look at these prices and see if you want to stay for them. I think you do for the corn. What's corn look like here this morning or going into the noon hour Central Time? 10.75 cents higher. Solid double-digit gains. 6.63 evens last. Just one tick off the highs, folks. That's May corn, not bad. Let's go out to the new crop. You'll be hedging into that later. 5.25 cents higher, trying to regain that 560 line. 5.59 even is last. We're just a one tick, a quarter cent off the highs of 5.59 1/4. So we're going to give that board a pass. That's good, right? We like to see that kind of gain, but we don't like to see what's happening in the soybeans. We got a lower board there. The front's not as much as the backs, though. 3 cents lower in the May, 14.98 even as we lose that $15 line. And here's another bummer. We go out to the Nove 23. You'll be hedging in there later. That's 13.25 cents lower. The 12.99 1/4. We've lost the $13 line out there. So not a good board when it comes to soybeans. Corn good, beans bad. Let's check out wheat. And I think you'll like this if you're a producer in wheat. 16 cents higher in Chicago wheat up front. That's May. 6.83 is last, a penny off the highs. Let's go out to the Dees. 13.75 cents higher. 7.16 is last. And that's about a penny and a half off the highs as well. So Chicago wheat, good stuff. Let's take a look at this, though. Hard red wheat in Kansas City, the old HRW down in KC. Boy, 32 cents up front. That's good. 32-cent rally there. 8.77 1/4 last. And that's only about a penny and a half off of the highs. That's May. Let's go out to the D's, 25.75 cents higher. 8.54 even, and that's a penny and a quarter off the highs there. So we like that hard red wheat board in Kansas City. Let's take a little drive over to Minneapolis and see what we got going in there. That too is double-digit gains to the upside. May's up 23.75 cents to 8.73 1/4. Couple pennies off the highs. We got Dees up 20.25 cents to 8.69 1/4. And then finally, let's take a look at cotton. We'll get to our next guest analyst. Cotton, that's down 4 points. Not doing anything today. 83.31. This one is out to lunch, and we've got Dees. Look at that, sharply unchanged. 82.88. Love it. All right, let's move on and bring in our next guest analyst. It's going to be Todd Horowitz, an old pit trading friend of mine. He's in Vegas. We can see by that vast art collection behind him there. Todd, thanks for taking the time on a Friday afternoon. I know you'd like to be down in the casino. Instead, you're talking to us. But what are your thoughts? I mean, I tell you what, I'm going to lay it up to you, and you can hit it out of the park. I think we've had a lot of eco data this week, whether it may be WASDE or the stuff for our economy. I don't think we have a clearer picture today than we did at the beginning of the week, and we've had a ton of information.
Well, I think that we do have a clearer picture as far as where we're going. The markets don't have the clear picture, but I think the grains are showing some strength, which is great, and I think they're going to show a lot more strength as we continue. You know, we have these inflation numbers were horrible once again, and they weren't even real, right? I mean, you multiply them by 3, that's what you end up with, and of course, retail sales weren't good. And I think the markets were trying to price in the Fed stopping hiking and looking for a potential cut. And I don't think that's the case. And I think the bond market is telling us that today because it's getting slammed right now. And I think that, we're going to see the commodities catch up to the rest of the world in these ridiculous inflationary prices that we've seen because the commodities have dragged severely behind. And I think now it's their time to take off. And especially if we get money out of this equity market, it's going to go into the commodity markets.
Yeah, I mean, there's something to be said for that. The thing I don't like about the ags is everybody celebrates these export sales, right? People come buying ours, but they're buying it because it's come off in price so much. It's a double-edged sword, right? So we're so cheap now. Do we want to celebrate cheapness with all these great sales? I don't know. That's something we'll talk about in the next segment. But stay right there, Todd. We got to go away. We got to pay some bills. Suzanne's expensive. We'll be right back after this. All right, welcome back to Market Day Report. I think that's the name of the show. I do too many of them. I can never remember. Let's take a look at that live cattle board behind my big head and see what we've got going on. Look at that. We've got, say, June down 62 cents, 163.87. I don't know. I don't like it. 17 cents off the lows. That's no bueno. If we go out a little bit further out the deferreds, let's talk about December. 25 cents lower out there. 171.30 is last, and that's actually closer to the high than the low. So that was a good idea to do that. Made me feel a little bit better as we move on. Let's talk about feeder cattle. We've got such a higher corn board. Let's see what that's doing to the feeders. This is hanging in there pretty well. Look at this. We got May up 25 cents to 208.05. And then if you go out to October, it's only down 90 cents in the face of a decent corn board. 230.15 is last. out there. So feeder cattle hanging in there, doing pretty well considering. And then finally, lean hogs, we should celebrate this because they finally found an up day. Maize up 65 cents to 80.60, 15 cents off the highs. Boy, I haven't been able to say that in a long time for hogs. Let's go out to August. That's up 82 cents to 90.57. That gives me the opportunity to bring on our next guest analyst, or our guest analyst is waiting in the wings. All right, Todd, you've seen the prices. You've heard the prices. Anything really jump out at you there, or do you have anything else you want to say? The floor is yours.
Well, I think fat cattle made an all-time high this week, so that's pretty interesting. I didn't know if we'd get back that high again, but we did. And I think the cattle's holding it very well, especially in the face of what's going on with crude. And I think as you look out the curve in the hogs, I think they're going to be pretty strong. I think cattle going forward, if I'm correct, will be flat to weaker going forward, but not bad because we're at higher prices. And I think hogs should start to make a pretty good run here.
Well, I think we're going to need to see that. I mean, even if we do see the drought break in the Central Plains, I mean, that's been a large part of why we have seen this cattle market go as high as it has. We've had some experts on that have said that this is a problem that's going to be around for 2 to 3 years. It'll take us that long to replenish those herds. That could keep things higher. Is there anything in the economy that you're worried about that could kind of put a blanket on those higher prices?
Yeah, well, the cost of oil is going to be put a damper on it. The cost of everything else that you're paying for is going to put a damper. That's why I don't think there's a lot of room to go down. I just don't think there's hell of a lot room, much more room to go higher.
Okay, all right, great stuff as always. Thank you very much. That's Todd Bubba Horowitz. He comes to us from Las Vegas. Thanks for being on the show, Todd. Bring it back here to Nashville so I can just roll it back over to Suzanne.
And I'm going to catch it. Thank you so much, Scott. And of course, crude oil. That's the big driving factor right now.
Well, yeah, OPEC's come out and they cut production because they saw that we didn't cover our strategic oil, reserve, and then here we go. We went from 70 to 82.5.